wanted to take a look at some options trading strategies that I've been putting together, showing some options trading strategy that can be used on a daily basis for SPY stock. Now, I have a whole series of options trading for beginners. It's an entire playlist on my YouTube channel where I'm putting out content on a daily basis looking at options trading strategies, options trading for beginners. And in this case, I want to take a look at Wednesday's price activity. I woke up Wednesday morning. Now, we got some economic data that occurred late on Wednesday. And so I broke down what happened on Wednesday and taking a look at what's going on with those options trading strategies. Let's jump in and I'll show you some of the numbers, looking at some of the Greeks, how much this options trading strategy would have cost had I put it on. I did not, and there's a reason why. Let's jump in. Here's a look at SPY stock. Of course, this is the Spider Select Sector ETF against SPX, which is, of course, the S&P 500 index. I woke up, you can see on the very far right-hand side of this chart, this is the 3-minute bar chart. You can see what happened going in. Bluish is after hours, yellow is pre-market. And if you just look, these are the first 2 bars, 3-minute bar chart for SPY stock going in Wednesday morning. Now, we have economic data that came out on Wednesday. And I'm very driven when it comes to economic data. I'm always looking for a catalyst. The assumption I have going backwards is that most of the time the stock market is kind of range bound, doesn't really move it any which way, just incrementally higher and higher and higher in a very slow process. But sometimes we get economic data and that shatters everything. And in this case, we had economic data. Now, the reference at the market, ATM puts and calls, 0 DTE, expiring that day. Reference was 531. The calls, you can see the price total. If you would have purchased a put and call at the money, ATM, when the SPY stock was trading at 531, the total was $3.50. That is outstandingly expensive. The reason? Real simple. We had the Federal Reserve meeting minutes released at 2 o'clock, 2:30 New York time. So there would only be 1 hour's worth of trading after we got the release of that to expiration, when the market, they basically kick you out of those trades unless you have enough money in your account to carry over the position. So given that, 350, what's the shot? Taking a look at, this was important to me, implied volatility was at 40, almost 50% for that day, pushing the 350 mark for the total. Implied volatility, now they break down the Greeks. You've got delta, theta, vega, rho, and the fifth one I can't think of off the top of my head. What happens is this will give you a price based on those metrics. And they look at standard deviation going backwards for any period of time. However, it does not account for the market's expectation. Implied volatility pushing 50%, that's huge. Normally, implied volatility could be anywhere from 10 to 15 to 25% at most. 25% if we had some overnight activity that is really kind of moving the market going into the open. But 10 to 15% implied volatility is kind of normal. And as it turns out, you can see, again, I did not put this trade on. We had a pretty decent sized move once the numbers came out. Now, what's interesting is that we saw the move happen. SPY stock dropped from 531 all the way down to 529.50. That's not enough to cover that 350 cost had you bought a straddle, buying 0 DTE, put and call at the money at the open going in. Now here's the thing. I looked at at my time which is Mountain Time, 12 o'clock, which is 2 o'clock New York time, 30 minutes before that information was going to come out. Here's a look, reference at the point, mind you, this is 30 minutes before the release of the Federal Reserve meeting minutes. And given that, there's about an hour and a half left of trading. So this would have been 2 o'clock New York. You'd have had to get out at 3:30. Generally speaking, now the put and the call was trading at $2.08. Generally speaking, on a normal day, there isn't enough price movement on average going backwards looking at 100 days worth of activity to cover the 208, and there's only an hour and a half left. Given that, again, I did not get involved in this. I looked at the 208 and I thought, no way, I'm not touching that. It's because of implied volatility being as high as it was. Here's a look at the chart. What happened, which is actually, I guess, kind of obvious, the market moved right back close to near, just down slightly for the day. But then NVIDIA reported later that night, but these options would have already expired. So given that, it was a wise move on my part because I looked and I asked the question, okay, what's normal? What can we expect? Should I expect to put this straddle on? The price with the put and the call, 0 DTE, too much, too high. I did not put that trade on. And I wanted to break this down because I wanted to show implied volatility and why that was so high because of, despite the deltas, what's going on with what happened in that day. Then, of course, you had NVIDIA. So a lot of market participants, if they were offering those options, were doing so at a premium, well above norm. That's an important distinction to understand if you're getting involved in stock options trading for beginners. Now, my options trading, I tend to put on certain types of trades whenever I expect some kind of movements. I like to front run economic data. I definitely did not front run this particular economic data piece because it was too expensive, not enough time. Nonetheless, if you want to follow along stock options trading for beginners, make sure to hit that like and follow button. I'll break down some daily trades for you, some options trading strategies that I use on a regular basis. I do like straddles a great deal. For SPY stock, they usually pan out pretty nicely. I also like credit spreads. Usually when I see the market kind of topping out a little bit, I'll sell a credit spread going into that and after we see some kind of rally. Make sure to hit that like and follow button for options trading for beginners. We'll see you in the next video.